Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite. It was a week where every indices fell and recorded their worst week of the year. Markets witnessed steep sell-off, with Nifty 50 falling 2.7% for the week. Broader markets too faced larger brunt, with mid-cap and small-cap indices shedding over 7.5% and 9.5% week over week respectively. The sentiments remain negative from the very beginning of the week. To put in context, the Nifty 50 is now down 13% from its record high of 26,300 reached on September 27th. The small cap indices is down 21.5% from the record closing high on December 11th. Let me quickly summarize the factors for this ongoing correction. First one is Trump's tariff policy uncertainty. US President Donald Trump has announced reciprocal tariffs. This means the US will levy the same level of tariffs on goods as charged by the exporting countries if their tariffs on the similar products are high. His reciprocal tariff may create significant headwinds for global businesses and may even cause a widespread trade war with countries. We have analyzed US India trade data. The US is a big trade partner for India, accounting for 17.7% of its good export. However, India's tariff rates are high, averaging around 8.5% compared to the US 3%, make it vulnerable to reciprocal tariff policies. Tariff hikes impact electricals, industrial machineries, gems and jewelry, pharmaceuticals, fuels, textiles, iron and steel, auto and chemicals, which is pretty much most of the listed market, and hence we see strong correction. We believe the tariff tension is going to keep the market under pressure till the time we have clarity. The second reason for this bloodbath is the FI sell-off continues amidst fading US Fed rate cut hopes. Higher than expected US inflation data for January 25th, 2025 dim chances of Fed cutting its interest rate. The US CPI increased 3.0% YOY versus the forecast of 2.8%. The high inflation print led to bond yields surging and the dollar index strengthening. Although the inflation has declined sharply from 40-year peak reached in mid-2022, the Fed's 2% target remains elusive. FIs find US as safe haven for investment since it is getting better interest rate, no issue of currency exchange losses, and no capital gain tax of 20% in India. Due to this, the FIs have sold Indian equities worth of 2.94 lakh crore since October last year. The good thing is valuations are now coming reasonable and we do not see much room to fall. This statement doesn't mean it will start rallying from tomorrow, but it will be lower sideways for now. Coming to news from Indian economy, India's retail inflation for January 2025 came in lower than expected at 4.3%, down from 5.2% in December 2024, primarily led by a slowdown in food price increase, which is a good signal for further rate cut scenario in India. India's industrial output grew by 3.2% YOY in December 24. The manufacturing sector's output increased by 3% YOY, while mining production rose 2.6% YOY, and power output increased by 6.2% YOY. Apart from this, government is addressing problems to bring back growth via budgetary measures in sectors which are not performing well. Let's summarize the key takeaways. 1. Market has reached a point where probabilities of bounces and reversals are high, as on larger index like Nifty and Bank Nifty valuation are in line with historical averages. Most of the indices are less than 5% away from their significant support levels. Q3 FY25 earnings season, though slow, wasn't nearly as bad as the stocks got beatings. Number 4. Bulk of major events for the year like budget, income tax bill, US presidency changes are behind us. Amidst all these crucial situations, it would be irrational to expect the start of a new bull market so soon. But historical data suggests that we are closer to the end of the swift correction phase and may transition to a consolidation or a range-bound phase. We should wait for market signals before allocating fresh into stocks and look to consolidate portfolios into stocks that have clear runway ahead. If your portfolio is hurting, just be assured that everyone else is too, and hopefully this too shall pass. The red needs to be washed away soon. That's all for today. Wishing you a profitable week ahead. Thank you.